Good afternoon. This is Brian Shannon from Alpha Trends Blogspot. It's Friday, August 17th, 2007. The market closed, and we saw a gain of just about 2%, actually 1.9% in the S&P 500 today. And believe it or not, the market was up for the week. It was up about 20 cents or so on the spiders. So you wouldn't know it by looking at this chart, and it is troubling that it is still below the 200-day moving average. The close was at 144.85. The high in here today was 145.90. I've got a bad print that I can't get rid of on this chart for some reason. But you can see the market came right up to about where it should have, which is that 200-day moving average. And if we look at the short-term time frame, the 10-minute time frame, you'll see that I've already drawn them in here. But if you take a look at the high from August 8th, where this most recent little leg lower began right here, if you take a look at that high down to yesterday's low, it did rally up to and opened right around that 2/3 retracement level. It pulled right back down and came in near this. Let me just get my trend tool proper in here. It came down, and you can see that this this downtrend line did act as support in here, and also was able to hold above yesterday afternoon's highs. So the market was able to recover back into the afternoon, but you can see all the volume really came early on, and then a little bit late in the day. It really didn't seem like much of a trading day to me. I made some money early on, and then basically stayed away from the market for the remainder of the day. But it's good to see in the intermediate term that's back above that 5-day moving average. Now you've got to look at today as an important level of potential support down near this 142 level. Now this big drop from yesterday and the action that we saw late in the day where it recovered with that intraday inverted head and shoulders pattern, that target was far exceeded. I think we were looking for about 143.5 or so, right up to there. But again, we've still got a declining 10, 20, and 50-day moving average. We've got a market that's closed below the 200-day moving average. And this is what appears to me so far to look like one of those sharp and sudden rallies that tend to occur in a downtrend. Now, we've had a real severe sell-off where the target from the measured move I had pointed out yesterday was met. And now I think that maybe we're going to get a little bit more stability in this market, that we're not going to see such big volatility. But we do have to remain very cautious with a declining 50-day moving average. I think that we need to see this market settle down a bit over time. But overall, I think you still got to be very careful that the sellers do have control, and that's the way you want to look at it as long as we've got a declining 50-day moving average. If you remember, just 2 months ago, I was even bullish right in here because we still had an advancing 50-day moving average. So don't get too excited about these rallies and get sucked into chasing them. There's still a lot of damage done here. Like I said yesterday, I thought that this big volume signaled that the worst was probably behind us for the very short term. But, you know, we did see very big volatility, and the market was actually looking about 25 S&P 500 future handles lower in the overnight session. But the Federal Reserve, when they came in the pre-market, that's really what got this market moving very rapidly in here. You can see that. So you've got to chalk up a good session to the bulls, though, but cast a suspicious eye over the action until we see more backing, filling, and correcting through time. The semiconductors yesterday, I thought that the worst was probably behind for them as well, as that 200-day moving average was tested in this prior level of support, which was the resistance back here from last year, basically, and early this year. So this 36 area continues to be very important for the semiconductors' longer-term health, and maybe we can continue to see a bounce in here. But this market came right up to about where it should have as well. Yesterday I said it looked like maybe it would continue up towards that 37 level where there was prior support. It got up to that level on the open, and that's also where, as I pointed out yesterday, we had the downtrend line that would be met and the declining 5-day moving average. The 5-day moving average is still declining, so this could put some pressure back on the market, or at least we might see a retest of these lows in here once again. So don't get too excited about today's action, in other words. The IWR, Russell 2000, once again tested this 200-day moving average right in here, and let me clear those lines off so you can see it. But here's the 200-day moving average. You can see it's starting to turn lower. We've also got a declining 50-day moving average. Yesterday I thought that this one was showing a little bit more relative strength. I thought it might be able to get up towards about $78 a share. I didn't expect it to go as high as it did, but it found sellers for the third time in 2 weeks right up at that 200-day moving average, and that tells us that we still have to be very careful about this market. It seems as though it is finding support in here. We had that huge volume in here yesterday, and I would expect that we're going to continue to bounce around in here, maybe in the $74 to $80 range is what's ahead for this. So it's up towards the upper end of that range. Might want to be a little bit careful in there. And I think we can really probably start looking at individual stocks once again as far as which ones have held up the best and continue to maybe show some upside opportunity, and also looking for some weaker ones. So perhaps I'll put another video together over the weekend with some stock ideas, as I am seeing some good ones that seem to have survived this extreme weakness. I've got a real bad print here in the Nasdaq 100 as well, so just ignore all this from yesterday. But basically, what we did see was earlier in the week I had suggested that it looked like the 46 level, and this was actually on Monday. I said it looks like the market's heading for 46, and as long as it gets down to 46, it's most likely going to hit that 200-day moving average as well. Well, yesterday we saw the big volume at that 200-day moving average. Today we saw a continued bounce. However, this market was up, well, it was up 1.9%, so it was up good percentage-wise. It did break this downtrend line at the end of the day. However, it's still below the declining 5-day moving average, and the volume isn't quite as strong. And also, you got to remember that this $47 level has really been a very important level for this market as far as support and then resistance over here earlier in the week. So until we can really see this market back above $47 a share, I think you want to be extra suspicious of the strength in the Nasdaq 100. It is the underperformer here because it is still below this important level of resistance and below that declining 5-day moving average.